now the hemorrhage is just about finding some bit of a stoppage. 8215 as I speak. Okay, on that note, let's welcome our market master Prabodh Agrawal, President and Head of Research at IIFL Institutional Equities. Prabodh, good morning. Thanks a lot for joining in. We could all do with some advice. What is this short covering bounce and the one that's now rapidly giving way? Do you think the market is spoiling for something lower than 8,100 now?
Yeah, the markets, the markets are volatile because of a bunching of several negative news, both domestic as well as extraneous. And therefore, I believe the markets could remain volatile in the near term. So, we all know the negatives. On the domestic side, basically the negative factors being that the fourth quarter earnings season has been a disappointment. Almost, 1 out of 2 companies that are reporting below expected numbers. So we are continuously downgrading our numbers. That also creates a lot of uncertainty for FY16 outlook. And while the consensus is forecasting a healthy 17-18% growth in earnings for FY16, there are not many believers for that number. And then, of course, there are other issues like the monsoon or the MAT issue or, on the extraneous front, the selling by the FIs, the rebalancing or, redemption pressure by some large FIs. So I believe all these bunching of negative news is creating the volatility that we are seeing.
Mm-hmm. How do you think the FIs will react very negatively to the 2 legislative hurdles that we saw yesterday, to the land bill and the GST bill? Now clearly the land bill is going to a joint committee and therefore not likely for the next few months. As well, the GST bill in the Rajya Sabha is getting referred to a select committee, so not in this session. Will this be taken as fresh negatives?
Yeah, I would certainly, that is the GST, the passing of the GST would have lifted the market sentiment. That's the most important piece of legislation probably in the Modi government, and that is now being deferred. So definitely it is incrementally a negative. And we'll have to wait for the monsoon session to see, what kind of amendments are brought and eventually whether the bill is passed or not. I have no doubts that the bill will be passed, but, any delay means that the implementation also gets delayed. So, that makes the timetable of 1st April 2016, a little doubtful.
Okay. Prabodh, hi, good morning. Good to see you in as always. Has the medium-term texture of this market changed, or is this still a buy on every dip market?
See, I believe the fundamental reason why one was positive on India a year back or even 6 months back is still there. I still believe that, the bunching of negative news that we talked about earlier, this will pass. And, many of these concerns will be addressed. And, markets will look on to, better things. What I believe, fundamentally, while the flows can create short-term volatility, but fundamentally, if I look at what will be driving the market over the next 6 months, 12 months, or 2 years, would be the underlying earnings. I am still of the view that despite FY15 being the worst year in terms of corporate profits in the last 10 years, in terms of PAT growth, in terms of revenue growth, EBITDA margin, PAT margin, everything seems to be the worst in FY15 in the last 10 years. But I believe I still maintain that the forecast of 18-19% earning growth in FY16 is not completely outlandish. And I believe there is a reasonable chance of that being achieved. Of course, we could see slightly lower growth of 14-15%, which would also be not disastrous. The reason why I am positive on the earning outlook for FY16 is because if you look at the base is extremely low. There are several industries where the EBITDA margins are at a multi-year or at a 10-year low. For example, material or utilities or industrials or consumer discretionary. I believe that there is scope for gradual margin expansion in all these sectors. In my base case, if I assume that my revenue growth picks up, see, last year we saw a collapse in revenue growth because of fall in commodity prices. Now, if we assume a slight recovery in revenue growth and a 50 basis point expansion in EBITDA margins, I believe the 18-19% growth that we are forecasting is achievable. So that makes me positive on the on the 6 to 12 month outlook on the market.
Okay.
So if you want to, you were telling us that there is not just expectation of revenue growth, but margin expansion as well because raw material costs are falling. What are the sectors that one should be looking to accumulate in this downtrend? Would you stick with the materials, the utilities, or, do you even go to the defensives and, pick up some of these pharma IT names now?
See, I believe, the pro-cyclical names, that is private financials, will do well. Industrials, I believe, will do well. Within material, I think cement, although the near-term outlook may not be so good, but with a 1 to 2 year view, cement will do well. I believe the auto segment will do well. And I also believe IT will do well, because the rupee is beginning to depreciate, and I believe the rupee will depreciate further as we progress. So all these sectors, I believe, have potential for earnings upgrade over the next, say, 1 or 2 years.
Well, you said that you would you are positive on FY16 earnings, but are you going to start picking right away, or do you think this market could give you much better levels, maybe 10% lower levels?
See, Lata, what I believe is that it is possible that the market could fall by 10%, but I would not really bet on it. That would be driven by technical factors like some very large FI selling, which could pull down the market significantly in the near term. That is unpredictable. What we are seeing is that while the FIs have been selling, the DIs have been buying, which is a very positive thing, and which is a long-term positive for the market. But yes, in the near term, a bunching of FI selling due to reasons we discussed earlier, like rebalancing of their portfolio or large redemption pressures, could bring down the market by by another 8 or 10%. But I believe that that kind of level may not sustain much. There is going to be a strong buying at that level, and therefore the bounce back from that level would also be very quick. So it's very difficult to time the market to expecting another major fall and then waiting for that fall to make your positions.
You were talking about the GST bill getting delayed as a big disappointment for the market, Prabodh. What is your own assessment of the Modi government's first year in power?
See, I believe that a lot of structural changes are being done, where the benefits will be felt with a lag. We all know the measures which have been taken, for example, the passing of the insurance bill, the passing of the coal and the minerals bill, the holding of the coal and the spectrum auctions, even, simplification of the labor law, simplification of the Small Factories Act, the decontrol of the diesel, and even the vision and the thrust shown by the government in certain vital areas, for example, the renewable energy sector, or speedy implementation of the dedicated freight corridors, or reinvigorating the railways, or indigenizing the manufacturing of defense equipments. Now, all these, I believe, are long-term positive. The short-term feel-good factor is missing, and the short-term impact is missing, and that's why the market seems to be nervous or seems to be disappointed with the performance. But I believe these are, many of these measures can be called out of the ordinary, and therefore would have an impact in the long term. That long term, I mean next 1 to 2 years. And in the meanwhile, of course, I'm not saying that the market should wait for the results to start coming in. But in the meanwhile, the cyclical factors will lead to earnings up, recovery. The cyclical factors being the fall in commodity prices, the fall in interest rates. These are cyclical factors which will lead to a recovery in demand and therefore the earnings growth. And in the medium term, these structural factors would start coming in. So I believe the government has delivered and continues to deliver.
Okay, so your favorites remain private banks. You're not tempted by the Bank of Barodas of the world.
Yeah, we have always preferred the private banks, and if you look at the track record over the last 1 year, 2 years, they continue to outperform. There is greater visibility on their earnings. There is less volatility in their earnings, and I would suppose, if you look at fourth quarter results of most of the private banks, they reported very decent numbers, and I believe this is not a one-off quarter. What we saw in fourth quarter would probably be repeated over the next 12 or 15 quarters. In terms of 20 to 25% kind of earning growth for most private banks in our universe.
All right, Prabodh, we'll let you go on that note. Thank you as always for your thoughts, and you have a good day. That's